A little bit on seasonals. We did a seasonal study. I'm not crazy about seasonals. We did a seasonal study. It turned out to be just okay. Seasonals indicate a market's tendency to move up, down, or sideways at certain times of the year. Last spring, we put together a seasonal study based on what the market had done up to that point compared to previous bullish and bearish years. We had many years of data for most of the markets. Overall, if the outlook is bullish, you want to buy dips. If it's bearish, sell rallies. Okay, this is what these charts look like when we put together the report. Yes?
Did your study compare to that guy that does a lot of seasonal? I forgot his name.
Best choice, I think. Best choice, is that it?
No.
Jake Bernstein? No?
Bernstein, right.
I don't know. I haven't followed Jake's work in a long, long time.
I was wondering how your study compared to his.
I really don't know. I'm sorry.
I don't believe it in either, that will.
Well, the interesting thing about seasonals is when you go against them, at least in futures, you can have tremendous moves. Yes, I think it can be great. If you get a bullish setup when it's supposed to be bearish, you can get a big move because so many people are set up for that seasonal. Let's see. I have to find my notes here because I don't remember what we said about the individual markets. Okay. This is what we wrote about the S&P in April. The S&P 500 index is trading very much like the patterns of the bearish years. As a general rule, bearish years often decline during January, followed by a snapback rally which starts around mid-February and peaks the first week or so in March. Then, for the remainder of the year, the market makes a series of lower lows and lower highs, often declining very severely into October. Well, that worked out pretty well. That was a seasonal that was quite accurate. If I have contact information at the end. If you email to them and request the study, I'm sure they'll send it to you. Well, we can see what happened. I don't have to read this. The only thing that was off was perhaps the swing high that was mentioned in the spring. Here we have T-Notes for the current year. 10-year T-Note futures are demonstrating a somewhat bullish pattern. It did, let me see, where were we here in April? So we did go up. We had a swing down and a swing up to a new high. And you know from what I've said before that I would consider that a top. So in my mind, we were probably done there, but we'll see. So it was, the seasonal was accurate, was correct for a while. In April, we said, regarding the Swiss franc, the strategy for 2008 should be to buy the dips. That didn't work. And let's see. And the yen. The quote from the study says, by the end of July, if this market is trading lower, your best bet is to sell the rallies. So far, it doesn't look like that one's going to work. This is up considerably. I think we took out that high now. I believe we must have. So this is another one that didn't work. I think we're 50-50 right now. Gold, in April we said, when gold is in a bearish year, it should be obvious by the end of April. From that point on, the best opportunities will be to sell the rallies. And this is the way it looked in April, and acting on that big bullish reversal, we would have expected it to continue to decline, and we already looked at gold on a few charts. It did continue to decline up to now. Let's see, let's go to the next one, silver. Our outlook for silver, I believe, was the same as gold. And right now that looks like a very good call. Copper. The key to trading any market is to try and spot as early as possible. The key to trading any market is to try and spot a trend as early as possible, and it's especially true for copper. By the end of February, if this market is trending higher, it may be a year for buying the dips. Looking at the charts of the 9 years when copper finished lower, bearish years usually start by trading lower during the first 3 months. As for 2008, it looks like a bullish year. That speaks for itself. I don't have to say anything. And in crude oil, in April we said, so far it looks like a bullish year. And it did go up quite a bit after that. And we're only at 110. It got up to high 140s, but it certainly hasn't been bullish since then. And there wasn't much in the way of dips to buy earlier when it was going up. Whoops. Let's see. We said, boy, we were pretty definite on this one. We weren't wishy-washy. Corn futures are definitely following the pattern of a bullish year. And once again, they did rally for a while. We were only at 608 there, got up, looks like above 750. However, the decline has been much steeper and faster than the move up. Wheat, we were definitely bearish. The chart spoke for itself at that point, and that continued to decline. Beans, I believe we had to be bullish along with corn. Oh no, I'm sorry. Soybean futures have a tendency to be strong during the first 6 months of the year, followed by a very weak July. As for the current year, so far it doesn't look like a bullish pattern. And that worked out very well. Rallied into July just like the report said it should, and it's been down very sharply since then. So that was a good call. I think coffee is one of the last ones. The pattern for the coffee market appears to be bearish, and it did work out well. By the way, that's another pattern that I love, a flat-sided pattern. I don't know if any of you have heard of Glenn Ring, but he talks about the flat-sided breakouts a lot. A flat-sided, well, and about how far a flat-sided market can go after a flat-sided breakout, especially a prolonged flat-sided breakout. This went sideways for about 5 months, finally broke down at that bar marked by the blue vertical line, and it's continued to go down, decline since then. We had our little lower high tops right here. We talked about our swings, and we had a lower high top here. We affirmed the decline right here. So it's gone down nicely, and it's a pattern I would definitely suggest watching for. Prolonged periods of sideways action, especially breakouts of flat-sided sideways action. I do, yes. Otherwise, it's just a jab. I do almost everything on the close. Okay, so regarding seasonals, knowing the seasonal tendencies can be helpful, but price action always comes first. I hope it's clear that I act on price action. You didn't see many indicators. I do like the stochastic somewhat, but overall price action is king to me.